In this video, I'm going to explain what the profit and loss report is, how it works, and what some of the common problems or questions that we get regarding it. So the first thing is you got to understand what the profit and loss report is. So the profit and loss report is going to report your income, your expenses, your net income or profit, and then the portion of that profit that is from your notary public fees. So, and that's the same when I say notary public fees, those are your notarial acts that you're recording on each of your signings. And we'll get back to that in a second about how that affects your taxes. So the first thing to understand is that your income on the profit and loss report is always reported when you actually receive your income. It's not when you complete the signing. So for example, if you do a signing and like on December 27th and then you don't get paid till January 15th, that income is not going to get reported until the next year because that's when you actually receive it. Now, you also probably notice that if I can click on any one of these categories here, and it gives me a detail, and if you need to see those, you can click on one and it'll bring up the signing or whatever form you use to enter in that expense. Another common thing, since we talk about expenses for a second, is that a lot of people try to expense their ink and their toner or ink or toner and their paper on a per signing basis. You can't do that. IRS rules say that you have to actually write off the entire amount the day when you actually purchase it. So you can't break it up in between signings or trying to do it on a per page basis. So that's another big question or confusion that a lot of people run into. Now, the net income, which is always going to be your total income minus your total expenses, is the amount of income that you essentially are going to pay taxes on. When I say you're going to pay taxes on that, I mean your federal income tax and your state income tax if you live in a state that has state income tax. Now, there's actually another tax that all independent contractors pay on income, and that's called self-employment tax. And the idea behind that is that when you work for a company and they take out Social Security and Medicare tax out of your check, well, your company actually has to match that amount that they pull out of your paycheck as well. So when you're an independent contractor, you don't have any taxes getting taken out. So what they do is they charge something called, or the IRS makes you pay something called self-employment tax, which is essentially the idea is the replacement for that tax. So since you're the employer and the employee, so to speak, when you're an independent contractor, you have to pay the total employer side and the employee side, which works out to be 15.3%. So now here's where it gets good for notaries. Notary publics, what the amount that they charge for notarial acts, not the total amount that you charge for your signing, but the portion of your signing that you charge for notarial acts is not subject to self-employment tax. So that's why it's so important for you to track your notarial acts on every signing. And the way that we report that is here. Now, what I've got here is a very good example, a very common thing that we run into where people say, hey, how come this shows zero when I've done tons of signings this year and I've been paid for those? It's always a portion of your net income. So in this case, you can see I'm actually at a loss. So the portion of my net income from notary public fees is zero because I have a loss. I don't have income. Now, as this number goes up, you're going to start to see the notary public fees get applied towards that. Now, another important concept too is capping. So let's say, for example, that you do a signing for $80. And during that signing, you do 10 notarial acts, and in your state, you're allowed to charge $10 per act. Well, that's obviously $100 in notarial acts, but you only got paid $80 for the signing. So the system, and Notary Gadget will do this, will actually cap those notary public fees, at least as they're reported on the profit and loss report. It's going to cap that at $80 because remember, it's a portion of net income. So you can't have a portion of something that is greater than the whole part. So that's a very common one. So what you're going to see here, like I said, is the portion of your net income from notary public fees, and then you're also going to see the portion of your net income that's subject to self-employment tax. And all it is this is going to be your income minus whatever your notary public fees. That amount remaining is going to be the amount that is going to be subject to self-employment tax. So you will have to, when you file your taxes, you're going to have to pay 15.3% on top of on whatever that amount is. And that's regardless of how many deductions you have or anything else. That's just like paying Medicare and Social Security tax. So I hope that helps give you a good overview of the profit and loss report, how it works, and some of those common questions / misconceptions about it.